Trends just this week. We talked yesterday about the strength in the euro. That's one of them, but there are plenty of other big shifts happening in markets. How sustainable do these new moves look to you?
I think that we are in the midst over these months we've kind of gone through of a paradigm shift in markets, of trends that will last for years. I think one is the era of US exceptionalism in markets is over. I think that was heralded at the end of January with the combination of Trump's tariff policies and DeepSeek. I think as a facet of that, and it is very linked, I think we're at the start of a sustained dollar downtrend. And I think finally, it is actually slightly different from the dollar downtrend. I think we're at a new era of euro sustainable appreciation. Even when I've been bearish dollar since December, and even when I was bearish dollar, I didn't like euro as the way to kind of play it. But that has changed immensely in the last few weeks with their new kind of fiscal spending, their new kind of plans to change the whole way that Europe has approached spending and defence. So I think that's changed the whole narrative there. So all these trends are sustainable. However, for the next couple of weeks, I'm very nervous. They've gone a long way very quickly, and just because they're multi-year trends, it doesn't mean they go in a straight line. So I expect a lot of volatility in the coming weeks, but ultimately I think these are trends where the pullbacks will be bought into.
Mark, if the euro goes up, is the implication that money is flowing into the eurozone? And if money's flowing into the eurozone, is it flowing into European equities? I.e., is this a zero-sum game? If Wall Street, if America goes down, does Europe come up?
It's not. I don't like necessarily using it as a zero-sum game because that's clearly not been the case, in history over long periods of time. But I think on a short-term basis, yes. I mean, part of this, the reason the euro trade is good is that Europe is talking about expanding its debt pile, so having more fixed income assets to buy. And therefore, ultimately, a lot of that money going to the euro is going to go into fixed income assets. But you're right, that takes time, that takes years, that takes months. So I think in the short term, it is positive for European equities. But again, this is where I'm a little bit worried that European equities have had such a tremendous run. If people want to get up in the euro trade, they're a little bit worried about buying it at these levels. I think instead, they're going to be excited by any dips to buy.
So, Mark, you have skewered the US exceptionalism narrative. Do you not buy into Trump's pledge of a golden era for the US, tax cuts for the US, Mark?
I think he really does want to deliver tax cuts, and I think there are many large structural changes that this administration is doing to the US economy, and there'll be some winners and losers. But I think that the backdrop here is that we had an extraordinarily overvalued narrative of US stocks were the only option out there. TINA, there was no alternative for investment, and therefore valuations just got way too stretched. With Trump ripping up the old world order that had been so beneficial to US, it means that premium has to come out. There is a new equalization in the world, and that's bad for overpriced stuff like US stocks and good for discounted stocks elsewhere.